If it goes another eightfold move, which is to say, oh, it did what it did 3 times before, big deal. We certainly have the fundamentals in the background that could cause that. We all know that. But if that occurred, gold would be $8,000 an ounce. Okay, fine. Let's say that's all it does, which I find kind of hard to believe because we're in a situation in the world right now, financially, market-wise, every political-wise even, that argues for something more. But let's just say an eightfold move. If silver merely went up and did the routine of going to, let's say, 2.1% of the price of gold, which is where it's been, like, of the last 50 years, it's been the majority of the months of those years have seen that sort of ratio. Okay. Then silver, if gold were 8,000, silver would be, $160 plus.
Investors who start trading or following the gold and silver markets are unlikely to go long without reading or hearing about the gold-silver relationship. The gold-silver ratio is an expression of the price ratio between gold and silver. The ratio shows the number of ounces of silver needed to equal the value of 1 ounce of gold. For example, if the price of gold is $1,000 per ounce and the price of silver is $20 per ounce, then the gold ratio is 50 to 1. The gold-silver ratio is the oldest continuously tracked exchange rate in history. The main reason the relationship is tracked is that gold and silver prices have a well-established correlation and have rarely deviated from each other. In today's video, we're going to share why Michael Oliver believes silver will outperform gold. But before we get into the video, make sure you subscribe to our channel and press the bell icon to never miss an update. If we go back 50 years and analyze the relationship between gold and silver, if you run a spreadsheet, and that's popular with a lot of people when they look at how many ounces of silver versus gold we measure in percentages, the same sort of thing where silver has declined in performance against gold since the start of 2021. This is when silver, for the second time, fell to nearly 30 in the summer of 2020. And then, in January 2021, silver rose again and actually reduced that price to trade above 30. At this time, the spread ratio between gold and silver narrowed, meaning that silver started to underperform gold in relative performance. And during this time, the price of silver also fell. Not in a collapsed mode, just in a constant scale, boring type mode, but in a constant trend. This gap was also deteriorating, meaning silver was down more than a percentage point. He usually says this when this relationship changes trend. The net trend of both metals will go in that direction, which means positive for silver and gold, but more so for silver. Silver has done things on a momentum basis that gold hasn't in terms of upside pushes. So again, without being specific, it's the 1720s. If we see that, then, as far as we're concerned, that's the last silver lining we're going to offer. At this point, we think both could move more obviously to the upside, and that's partly down to the factors, the crisis in the UK, whether Fed policy continues or not. Since 1999, period 2000, gold was trading at 215 ounces. It reached 1920 over a period of 10 or 11 years with a rapid break of 3 weeks in October 2008, where there was a rapid fall in gold. It was sympathetic to the stock market, but then the sympathy stopped. Gold rebounded and said goodbye to the stock market, which took 4 years to return to its former high. It took 4 months for gold to return to its peak. Gold returned to increase 8-fold. If you step back and look at it on a log scales chart, going back 50 years, you might barely see a drop in gold. If he makes another 8-fold move, that is, he has done it 3 times before, we certainly had the fundamentals in the background that could cause this. But if it were going to happen, gold could cost $8,000 an ounce. It's difficult because we're in a situation in the world right now, financially, market-wise, politically speaking, even arguing for something else. If you go back and study the proportion of silver as a percentage of the price of gold, you will see that there was a time when the price of gold was 6.5%. Sometimes it was more than 4%. Many times it was 3%. And most years, at least this 50-year period, more than 2% of the price of gold has been traded. When you look back 50 years, you've done it many times, silver would be $210 an ounce if gold went up to $8,000. The question now is, how do we get out of this recent downturn in silver and gold? We believe that the money has given enough positive things. The silver to gold ratio gave us the positives. We're waiting for the gold to give us the positive result.
In major bull markets in gold and silver tends to outperform gold. In fact, it's true with even modest bull legs in gold and silver. And if we go back 50 years and have analyzed the relationship between the two. Well, if you run a spread chart, and this is popular with a lot of people where they look at the number of ounces of silver to gold, we measure it on a percent basis, same type of thing, where Silver has been declining in relative performance to gold since early 2021.
That's all for today. Let us know your views in the comments section below. Don't forget to like this video before leaving. Thanks for watching.